All right, welcome back to the program. I have Ari Aisen, who is the IMF resident representative in Nigeria. Hello, Ari. Welcome to the program.
Hello, Nancy. It's great to be back.
Great to be back. Great to have you. I have mixed feelings this morning because I know you'll be going in a couple of days. Thank you, Ari, for the honor, for coming here just before you leave to say hello to me and also, to speak about Nigeria's economy before you leave. You've been here for like 3 years?
3 years.
3 years.
Yes, 3 years. Three very quick, eventful years. A lot has happened. Good things. I think we are in a better place these days. Of course, challenges remain. But very, very happy to be here with you, Nancy, and talk about the economy and how we all are thinking about Nigeria going forward.
In your 3 years, what would you say has been the greatest challenge for us? Because, of course, IMF continues to bring out the Article 4 consultation report and all of that. In 3 years so far, even as you exit, what is the greatest challenge facing us? Is it the greatest challenge, the greatest risk? Let me reframe, the greatest risk.
You see, that's a tough question. And I think that the issue of the fuel subsidies and the unification of the exchange rates, something that this administration has decided to tackle, were in the last several years, even before I came to Nigeria, the main risks for the stability, for the macroeconomic stability of this wonderful country. And so I think that now we are in a better position to treat the follow-up needed reforms after those things were addressed. And hopefully we can avoid the risk of reversing to the past where fuel subsidies, which were costing 2% of GDP just in 2022, and the administrative controls, the shortage of foreign exchange. I think now we are in a better position to put those things to sleep for good. And we need to do it in such a way that it avoids the risk of reversing to previous practices. These are the main risks, and these issues were those who really occupied our minds together with the Nigerian authorities and other stakeholders to really move in the direction of macroeconomic stability. I think we are closer to it. Even if people will say there are challenges, of course there are. But I think we are in a better position to address those.
Ari, okay, we could be in a better position to address those, but don't you also see that there is a bigger risk of us getting into it now? Because I know you must be aware that the president at the time, I think about 2 months ago or so, or a month and a half ago about that, did say, let's put a stop first, because they saw the way fuel price was rising, petrol price was rising, and they said, no, let's halt it. There shouldn't be a price increase at the pumps. So are you not worried that perhaps fuel subsidy is back and Nigeria may go back to that issue of saying, today, for example, all prices close to $100 US, 94, 95, 96, 97 US dollars. And that means that if all prices increase, fuel at the pump price at the pumps would also increase, and Nigerians will not find that funny. So don't you think the government is also realizing that if we allow this fuel price to keep increasing at the pumps, this will also bring in more social unrest? So and cost of living would increase.
This is a deep question. It looks a very simple one, but it's a very deep question, and let me tell you why. When you take the domestic price of fuel, yes, it depends on the international price of fuel, it depends on the exchange rate, naira, dollar, but it depends also on other things. Taxes, landing costs, other commissions and things, demurrage, other transportation costs, and so on and so forth. So one should not expect, and many countries don't change every day the pump price on the basis of things fluctuating. So yes, since the last price adjustment, the international oil price went up, the exchange rate has depreciated a bit, certainly in the parallel market, not as much in the INE window. So eventually, that price would have to increase. But maybe, actually, there might be a reversal of the exchange rate. Maybe there will be a reversal of the international price of oil. In those occasions, then it will require also a reduction of the price of fuel and the pump. So I think what we are here, it's important to depoliticize the issue. How do you depoliticize the fuel price pricing? You try to adopt what we tend to call an automatic pricing mechanism. The automatic pricing mechanism is typically a formula that adjusts the domestic prices. And many countries adopt that. And it doesn't mean that you adjust day to day, because you can have parameters that smooth the application of the formula to smooth changes in the domestic price. So I think Nigeria needs to start having this discussion. How do we create a mechanism that we can explain well to everyone to understand, so that even calling subsidies something that might actually be not going to be sustained, maybe to be reversed. But of course, you are absolutely right. If the price of oil internationally continues to go up and the exchange rate continues to depreciate, eventually there will be an implicit subsidy that needs to be tackled through the pricing system. And so I wouldn't say yet, let's give a chance to see developments, because I don't think that subsidy can be measured on a daily basis, in the sense that maybe all the parameters in the formula, potential formula, would eventually bring the price to a sustainable level that will not require subsidy. So I think that the next step forward is to decide on a formula, an automatic pricing mechanism for fuel pricing.
And I wonder what that formula would be, because Ari, I'm really struggling with this your explanation in terms of how do you devise a formula. Will that formula be immune from what is happening daily in terms of global oil price? I know that, of course, there are forward contracts for oil and all of that, but how do you come up with that kind of formula?
Yeah, typically what countries do, they calculate the price of oil internationally, they calculate the exchange rate, all other costs, and this is the price domestically in Naira or in any currency of any country. Now, prices are moving every day internationally. Exchange rates are moving every day. You are not necessarily adjusting every day.
Yes.
So typically what some formulas do, they adjust prices, I don't know, every month.
Yes,
or every
in
3
the
months,
case of Nigeria.
or every 3 months. You can build the formula whereby the price will only change after 3 months. Within the 3 months period, prices may have gone up, may have gone down. So you don't need to pass all the volatility to the consumer at the end. You put a mechanism in place whereby you can smooth the impact of the volatility to the consumer. Sometimes you'll be lower, sometimes you'll be higher, but you don't have to pay necessarily a fiscal cost.
Okay.
This is what I'm trying to, it's a bit technical, but it's very important to have a discussion about that.
Yes, I'm understanding what you're saying. I do understand what you're saying. Now, the second thing, Ari, is are you concerned about the backlash that the IMF and your colleague, the other Bretton Woods institution, World Bank, has gotten, especially bearing in mind that before even President Tinubu implemented the fuel subsidy is gone mantra, that a lot of people, okay, we now started seeing what is happening, the cost of living crisis and all of that, and people are saying, okay, the Nigerian authorities are listening to the IMF, they're listening to the World Bank, now see where we are. Are you concerned about that? Because the advice that has been given by the IMF and the World Bank, the president, there's no subsidy for fuel. We need to harmonize our exchange rate. Now we see what it has cost. Inflation, the pass-through effects, the inflation has increased. There's no harmonization, Ari, of any exchange rate, because that arbitrage is still there. We still have the foreign exchange market, the Nigerian foreign exchange market. We have the parallel market, and we saw the Naira hitting 1,000 Naira. In fact, a lot of people are saying that it may hit 1,500 Naira before the end of the year if nothing is being done. So how concerned are you about all of this in terms of even the backlash, and in terms of perhaps the kind of advice that you and your colleague, the World Bank, has been giving Nigeria?
I'm not very worried about the backlash, simply because the policies adopted were the right ones. I think what's important to say here is that you need additional policies. You mentioned about the premium with between the parallel market and the INE, the official rate. That premium points to huge liquidity, excess of nairas in the economy. One way to look at it is that this is a shortage of foreign exchange in the economy. Fine, the authorities are working to try to improve the liquidity in foreign exchange. What about reducing the liquidity of nairas? Because at the end, the exchange rate is dependent on the amount of nairas and the amount of dollars, the demand for nairas and the demand for dollars, supply of nairas and supply of dollars. So all these determines the exchange rate. So we have been saying that monetary policy is critical here. To tighten monetary policy means not only raising the MPR, but to dry up the excess liquidity in the system. Money growth is growing over 30% per year in Nigeria, year after year. That is too high. And people with those level of interest rates in Naira are actually moving to the US dollar to protect their savings. So there is no fighting chance for the Naira to stabilize. And if you're trying to avoid people getting the dollars, they will tend to go to the parallel market to get the dollars they need. That can be over the 43 items that are still restricted in receiving foreign exchange in the official. That, in our view, should go, because that is difficult to justify.
Won't it put additional pressure on FX?
Puts additional pressure for those importers who need to import those things. And they still want, and they can, they just don't have the access for the foreign exchange.
So they even still go to the parallel market now to get the dollars to import for those three items.
So eliminating the reasons for the premium is very, very important. And if the exchange rate needs to go there temporarily, that is fine. But if you have too many nairas chasing too few dollars yet, the exchange rate will depreciate. That's why, in our view, you need to tighten macro policies, particularly monetary policy. That is a strong recommendation we've made early on, and we urge the authorities to consider this very seriously. Of course, there is a cost. Monetary policy is not for free. Interest rates are higher. Things are going to, there is a short-term pain associated to it. But the bet is that you, once you adopt that, you can actually find a better place in few years down the road. So the risk is that if this transition is not managed properly, there will be a reversal of previous policies. I hope that is not the case. I hope this is not a risk that materializes. I would love to see Nigeria sticking with the policies, but complementing with fiscal policies to raise revenue, more revenue mobilization, and more tightening monetary policy.
Okay. Ari, let's talk about still this FX backlog, because of course it's been said that Nigeria is having an illiquidity problem when it comes to foreign exchange. Will the IMF render help to Nigeria, for example, if it comes? We have a new finance minister, Wale Edun. We also now have a central bank governor, Yemi Cardoso. Do you think that the IMF, if Nigeria runs to it for bailouts, as it were, in terms of dollars perhaps to clear that FX backlog, that the IMF will be able to do that? Bearing in mind that the last funds we got was the SDR, I think, during the COVID days. What kind of intricate relationship would that be?
Well, first of all, the IMF is helping Nigeria.
Okay. Are you helping financially?
So we have a huge capacity development program here, and we have a policy advice and close engagement with the authorities. And I think this is of great help, and I'm happy to report that we have a wonderful relationship, like we had with the previous administration, also with this administration. The IMF is a great partner of Nigeria. On the financial assistance, yes, in the past we did provide financial assistance when requested. So we need to wait and see if the authorities will ask for financial assistance from the IMF. But let me remind you that this is just one instrument of how our presence here can actually be displayed. And it's up to any member country, a sovereign decision, if to approach the IMF with the various mechanisms that we have to support. Also, let me say that with oil prices very supportive, I think Nigeria may have a chance to avoid severe balance of payments problems. In fact, there is a trade surplus or current account surplus at the moment. If oil volumes can increase, as everyone is expecting, maybe there is no need of additional financial assistance. So I would focus really on policies, ownership of policies, tighten policies, bite the bullet of a short-term cost, insist in having the oil revenues and oil production and oil exports increase, because this is central, and meanwhile continue to work on the non-oil revenues, which have been growing and should grow even more if they broaden the tax base as everyone is expecting. Consultations with the private sector are very helpful to that. But you may need to consider eventually some higher rates too.
Yeah, that even brings me to my next question, but you've answered it, because I wanted to ask that this is the first time, at least within my own knowledge, that Nigeria is experiencing a downfall despite oil boom. This is the first time that oil is close to this amount, climbing almost on a daily basis, yet Nigeria's revenue is not reflecting oil increase as an oil-producing nation. So you've answered that. We need to increase our volumes, putting policies in place and all of that. Now, the next question is around fiscal policy. What kind of fiscal policy options, macroeconomic policy options, should this administration put together? You could give me three. For example, our debt has risen due to ways and means, of course, securitization. There's also some still hanging there. Though the finance minister has said there might not be any borrowing in the short term. Let's see how that goes. What are the macro policy options that you would recommend for us to take right now, bearing in mind that, of course, fuel subsidies somehow is back, because that price is still hooked. It's not reflecting increasing price. So what are the policy options now?
Very good. So and by the way, we see some green shoots of this already happening.
Okay.
And you mentioned no additional borrowing. But the first one is ways and means. Central bank financing of the deficit needs to be reduced and eventually eliminated completely. And I think there is appetite for avoiding that, resorting to the central bank for funding, because the ways and means is supposed to be a liquidity facility. It's a short term. Needs to be repaid within a year according to the law. It has not been the history of the past several years. So I think that good monetary policy and fiscal policy coordination are going to be essential here. So on the financing side, no reliance of the central bank is going to be important, because it helps contain the liquidity and the increase of money supply into the economy that later on is difficult to be sterilized or mopped up, dried up from the system. So that is one, and I think moving that direction. Also, prudence in fiscal policy. What do I mean by prudence? Deficits remain high. It was very positive to eliminate the subsidies, even if partially, as you alluded to. Let's see how partially or how prices will eventually reflect the realities. But for now, if you compare to last year, 2% of GDP of the deficit was explained by the fuel subsidies. So that is already savings that need to continue being thought through. But the fiscal deficit remains high, meaning that spending, which is very little in Nigeria, is still much higher than revenues. And here, the existential issue, we have discussed this before, of mobilizing more revenue. The independence of Nigeria of any other financing mechanism, from the central bank, from the international community, from the capital markets, relies on the capacity to mobilize domestic revenues. Nigeria has only 8.8% of GDP in revenues, one of the lowest in the world, as you know. You definitely need to increase that to be able to provide goods and services, public goods and services. We had done internally calculations. Our director even of the Fiscal Affairs Department, Mr. Gaspar, participated in a paper, an article that shows that if you do not have at least 12.75%, 12.75% of revenue as a share of GDP, you cannot make a meaningful change in social indicators in the country.
Okay.
And this is very problematic. So Nigeria needs to focus on tax administration, on increasing compliance. The social contract, everyone needs to chip in. Of course, the governments need to make sure the use of funds are appropriate. Governance is there. Also, equity among taxpayers. You cannot raise rates and always at the same taxpayers who are paying because there is no equity. So you need to broaden the tax base. So these discussions are very helpful. There is a committee in place. Mr. Oyedele is leading, a very competent economist. And I wish this to move forward so Nigeria can really reach this social contract and raise the revenues that it needs.
Okay, Ari, we have about 2 minutes to go. How long can Nigeria really stay in this stagflation environment? Because what we're suffering really is stagflation. How long can we stay in this before the skies open, before Nigerians will really heave a breath of relief? Or just like the president said, let the poor breathe, before Nigerians will breathe. So how long will this stagflation environment be? That's one. Secondly, what do you think should be Naira's fair value? In the midst of all this jamboree, if we are able to stabilize, where do you see the Naira?
Okay, on the first question, you know, we always understood that living many, many years of various distortions and trying to correct them would bring a cost and a price. So we are in a transition period. Needs to be managed and needs to be complemented with policies, tightening monetary and fiscal, as I said before, so you can reach to a safe part. Typically, these transitions may take some time, sometimes 1 year, 2 years, maybe less, maybe more. It's difficult to estimate. Nigeria is a big economy. It has interest of various stakeholders, lots of investors trying to get more predictability, visibility on the macro level to bring additional FDI. Very successful trips were happening in India, in New York, in the UAE. So Nigeria has enough supporters if there is some sort of stability. I think we are going to see more stability, and we are going to see much higher growth rates and hopefully lower inflation. Let's not forget that Nigeria did grow at double digits not long ago. I think that can be reproduced if we manage this transition well.
Okay.
So,
Naira's fair value?
I don't know. Do you?
Because the Naira at the parallel market now, of course, 1,000, if not even more than that. So where do you see if we're able to stabilize? What is really Naira's fair value?
This is a very difficult question that no serious economist will be able to really pin down on a day-to-day basis. Of course, we have models for the medium term, on the fundamentals. You know, some of those models would point to some undervaluation, meaning that it's probably too high. But I'm not going to commit to that because we need to see the policies.
So the policies will determine
the exchange rate. Of course, if you have less Naira, if you have more foreign exchange, if you have better fundamentals, exchange rate is about fundamentals, economic fundamentals.
And they will respond.
They will respond to that. Okay. And it's about confidence. And confidence should come back to Nigeria.
Are you seeing that confidence coming back?
I'm hoping for.
Okay.
I sense that from my discussions with investors that there is appreciation for the initial moves of the reforms. Okay. They are waiting to see a continuation of those reforms.
Okay.
And so, I think we are moving in the right direction.
Ari, just before you go, I won't allow you to leave this show and leave Nigeria without asking, what did you enjoy the most about Nigeria in your 3 years here?
Nigerians.
Yeah, Nigerians. Okay. One word, what one word can you use to describe Nigerians?
Extremely hospitable, generous. You know, people who don't know Nigeria typically overlook this. I am.
So it's more than one word now.
This brings some emotion,
wow.
Because I have made lots of friends here, people that I value a lot, and I will miss Nigeria forever.
Thank you.
And we will continue to follow wherever I am to make sure that it succeeds as it should.
Thank
It's
you.
the giant of Africa.
Exactly.
And it's destined to succeed.
Thank you very much. Thank you very much, Ari.
Thank you.
All right, I've been speaking with Ari Aisen, who is the IMF resident representative in Nigeria. He will be leaving in a few days, and he's graciously come on this program, you know, to honor me again. Thank you very much, Ari. And I wish you well wherever you're being sent to. Let's keep in close contact. That's the show. Be the best you can be and be the change that you want to see. I am Nancy Naji. Bye now.